Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Prashant Nair. Well, it looks like it's going to be a session of consolidation, at least when you look at the frontline indices. So just up close to about 0.2% on the benchmark indices. But take a look at the broader markets. That's where the action is. So the mid-cap index is outperforming. It's rallied over 1%. The advanced decline ratio is strong. And to talk about the two big cues for the day, apart, of course, from earnings from the likes of BPCL and Eicher Motors. One, you've got the Prime Minister's speech expected to start any time from now. It's likely to be on some tax reform. Let's see whether any relief comes in for the common man. And secondly, you've also got the weekly F&O expiry today. Hi, Prashant.
Reema, hi. So yeah, I mean, 37 odd points on the Nifty. You know, the fact is that for the last so many days now, it's looked like that the market is tiring out. It maybe wants to stop for a little bit, consolidate, but then it keeps moving on, right? I mean, it keeps chugging along. It's not any longer very large gains on a day-on-day basis, but it's doing just fine. I mean, the broader market is sort of pulling its weight, and I'm talking about the mid and the small cap part of the market, and you've got enough activity. I mean, this rotation which we've seen playing out, metals, we've seen that in real estate, we've seen that of course, I mean, early on in banks, pharma, of course, is out of flavor now. So, I mean, there's enough and more activity, and the market isn't stopping. Although, you know, every day you get a sense that, at least for the last couple of days, you get a sense that maybe things will consolidate around here. 11,346 is where we are at. Market breadth is pretty positive, 2:1, actually over 2:1 in favor of advances. You know, we'll get to more market internals, dynamics, etc. in a bit from now. And of course, we'll cut across to that Prime Minister's speech in just a bit. But let's talk about a couple of stocks right on top. Aurobindo Pharma reported a decent first quarter set, and expectations were beaten pretty easily. The company's debt has also come down significantly. My colleague Sonal is here with the key fine print to watch out in the numbers. Sonal.
Thanks a lot for that. Well, for Auro Pharma, the numbers were largely in line or slightly higher than the CNBC TV 18 poll. Revenues came in at 5925 crore rupees, 50 crore short of the poll. However, EBITDA was higher at 1257 crore rupees. Margins absolutely in line at 22.3%. Profits were higher than the poll. That was driven by a higher other income and also a forex gain. But in terms of geographies, it was the US business that drove growth this time around. Revenues grew 16% on a YOY basis, and also the dollar revenues were higher than what the street was working with. API business saw growth of 6%, ARV business grew 34%, but some softness seen in the growth markets and the European markets. But the biggest positive in these results was the debt reduction. So debt has reduced to $191 million versus $360 million on a quarter-on-quarter basis. Net debt to equity ratio has come down to 0.08 times. The stock is also trading at reasonable valuations of 15 times FY22 EPS, seeing some decline in trade today also because it is in the F&O band. In terms of their con-call commentary, it was quite positive. They see gradual improvement in the US business. Also, in terms of the performance, they expect Q2 to be better than Q1 in terms of improvement. They did make some provision for COVID impact and R&D assets to third party. X of those provisions, the EBITDA margins, according to them, could have been north of 22%. All in all, good set of numbers. But yes, the stock is seeing some declines in trade today. Back to you.
Okay, Sonal, thanks very much for that. I think we are ready to go across to the Finance Minister and the Prime Minister and listen in.
The vision of the Prime Minister is to empower the taxpayer